As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a first-time guest today with us. Bruce Bragagnolo, chairman of Inca One Gold, is here with us on Reluctant Preppers. Bruce, thank you for joining us here.
Hi, Donna. Good to be here.
We've heard you interviewed elsewhere, including on financeandliberty.com, which is a partner site of ours where we promote our work, and who also is a sponsor for us. And we've noticed some of the topics that you discussed there and some of the commentary that was recorded by subscribers afterwards. And it intrigued us to want to have you on our channel as well. So thank you so much for agreeing to come on. And if we could just jump right in, you have a long history of influential success in the precious metals mining industry. If you could give us just a 30-second recap of kind of what are the highest points so people can understand where you're coming from in your involvement with precious metals.
Sure. I mean, I guess my first involvement was working in the mines up in my hometown of Timmins, Ontario, when I was 16. Timmins had a big history of mining. It's one of the biggest gold producing areas in the world. So when I grew up, I was steeped in the history of mining. My grandfather used to work. Actually, both my grandfathers worked in mines, but my paternal grandfather worked in the McIntyre mine up there. My father worked in the mine, although he was a hockey player most of the time, but he worked in the mine in the summers, and I worked in the mine as well. So got to mining early, and my successes personally in the mining industry were being a director of Continuum Resources, which found the San Jose mine in Oaxaca, Mexico, which is now owned by Fortuna, and being the co-founder of Silvermex Resources and Timmins Gold Corp. And Timmins Gold Corp owns the San Francisco mine, and while I was there, we actually bought the Caballo Blanco deposit and the Ana Paula deposit, which we were going to turn into mines. The company's under new management now, so we'll see how that goes for them. The San Francisco mine, which we put into production, is still mining 100,000 ounces of gold a year on an open pit heap leach operation. So quite proud of the fact of being the co-founder of both Timmins Gold and Silvermex.
Now, in the overall industry of gold mining has been to satisfy amazing and increasing demand over time. If you could give us your sort of a brief overview from your standpoint of the history of why gold and silver have been in historical demand, and recently seeing record demand, including we've seen multiple times where the U.S. Mint has had to halt production of either U.S. Golden Eagles or Silver Eagles because of, ostensibly because of lack of ready supplies of raw materials to make those from. So can you talk to us about historical demand, what drives that, and what the current record demand, what's driving that?
Well, I guess, from my readings, gold has always been a historical supply of wealth, or a source of wealth. There's only so much of it. It's difficult to find, difficult to mine, and it looks great. Let's face it. Having a bar of gold in your hand is much better than having a pile of dollar bills in your hand. So, from that perspective, it's always been a store of wealth. It's funny. I was at a Bitcoin convention a few years ago, and the algorithm for Bitcoin and the increase of supply of Bitcoin, I think, is very similar to the supply of gold in the world. I'm not sure if that's a mere coincidence, but that's the way it worked out. So the increase of gold supply is very similar to the increase of Bitcoin supply. So there must be something mathematical about it. There must be something tangible about it. But gold has certainly been a source and a way to preserve wealth for generations.
And that's throughout history. What do you correlate with the factors driving record demand in recent years?
Well, quite frankly, I think it's population growth. It's shocking to me that sure, we're seeing some we're seeing some more supply of gold over the last few years. But I believe the statistics are that we reached peak gold in 2015. But from what I can see, there's been a population boom out there. Anybody that drives can see it. The traffic jams are getting worse and worse. There's more demand for housing around the world. There's been a big population boom in the emerging market countries. So if you go to Kowloon, for example, every second store is a jewelry store. The wealth factor in China and in the emerging economies has allowed them to buy more gold. So gold should be much higher right now in price, especially when you look at money printing that's happened. So if you take the population growth and the steady increase in the demand fueled by population growth and a more affluent middle class in the emerging countries, and you take peak mine supply, because nobody's spending money on exploration or development of new mines over the last few years, you should have a perfect formula for a much higher gold price.
So you're shifting, and correctly, into current dynamics of the current industry. How do you see that? You mentioned demographics and you mentioned middle class, creation of middle class in emerging countries. What other factors do you see in our current global economy that will impact the near-term future of precious metals one way or the other?
Well, there's so many factors these days. It seems like all the trading is done on technicals rather than on fundamentals. If you look at pure fundamentals and just the M2 money supply, gold should be around $2,600 an ounce, but it's not. It just strikes me that every time gold pops its head up, it gets whacked down like a whack-a-mole. So we've been facing some strong headwinds in the last few years. Hopefully, those are somewhat ending now. I don't think there's really any need for any suppression of the gold price anymore. I think there's enough other worries or other concerns in the economies that people have to look at. So, with a rising U.S. stock market and a rising dollar, I guess there has been little impetus to own gold. But now we're seeing. Well, who knows what's going to happen? I mean, I really don't know anymore. It just seems like every time you think you got a handle on things, something turns around. I do think the gold is going higher, though. I think it has been oversold, over the last even 3-4 years, and I think there's more demand for it as a safe haven. I just get this feeling that Trump is good for gold. He certainly likes it. He's got enough of it in his penthouse in New York.
That's our next question, actually, is what impact do you foresee from a Trump presidency on gold and silver? And if you could kind of start back from the driving factors that you see that are going to be emerging. We've certainly heard people talk about government spending, whether that'll go up or down under Trump, the debt, the U.S. debt, whether that'll go up or down, and even some talk about Trump having made some comments about advocating the virtues of a gold standard or a gold-backed currency, which we haven't had in the U.S. since 1971. So could you kind of address your perspectives on what a Trump presidency likely may hold for the future of the gold market?
Well, I think all of his infrastructure is going to require more government spending. So that's going to, obviously, if he can get it approved. So that is going to lead to, more debt, which should lead to, more money printing by the Fed. So at some point, that has to, the fundamentals of the money printing by the Fed have to take over. And everybody has to realize that even in American dollars, that the price of gold should go higher. It's actually looking very good in most other forms of currency. If you look at the price of gold in pounds or rubles or Canadian dollars, the price of gold is doing quite well. It's just the U.S. dollar denomination of gold that is lower. So. We've had a massive upsurge in the U.S. dollar in the last 2 years. So, all of those factors are the stock market's up, the dollar's up, and oil and gold are down, but oil looks like it's making a comeback here, and hopefully so can gold. I don't think you have to see a lowering dollar and lowering U.S. stock market to see a lowering gold price. I think gold can rise along with those. And actually, you don't need to see a lowering interest rate environment either. I mean, the last few years of lower interest rates haven't been good for gold. So maybe we need higher interest rates for gold. Then the money will get out into the economy. We'll see an increase in the velocity of money rather than just the supply, and that should help gold.
Can you help us understand that? Because some people have criticized gold holders or precious metal stackers, saying that you're basically sequestering wealth away. You're taking it out of circulation, out of the economy. It's not doing any good. It's a non-productive asset, and it just sits there. I mean, but you just said that would be related to an increase in velocity, so that seems to be pulling in different directions. Can you help us understand what you meant?
Yeah, we have to see that right now. What we're seeing is useless money out in the economy. What we're seeing is money that hits the banks and then just recycles amongst the banks. It doesn't really get out into the economy in the form of loans because it's too risky. There's not enough reward on the risk-reward spectrum for the banks to lend the money. So all they do, the big banks, just lend it. The Fed lends it to them to improve their balance sheet. They lend it back to the Fed on an overnight basis, and the banks are just lending amongst themselves. So the money, because the interest rates are so low, the money is not hitting the economy. So all we're seeing right now is a stagnant lending environment and poor bank profits because they can't make any money at it. So what's going to happen is that the money, as you raise interest rates, the money actually gets out into the economy. And people will start spending it again. And that historically has been good for gold. So it's not just the supply of money, it's the velocity that counts as well. It has to hit the economy.
So now my brain is shorting out again because you mentioned with rising interest rates, we would be liberating more money to make it out into the economy. But I thought that was opposite to conventional wisdom, that the reason they're driving rates down to almost nothing and even to negative is to flush that money out of. So people won't hold it in savings, but they'll take it out of the bank and use it because they don't want it to sit there losing value or costing them money to, because of low, near zero or even below zero effective interest rates.
Yeah, that's not the economy. I'm talking about a small businessman who needs a loan to start a business. The stock market, all that's happening is the money is going out into the stock market, and hedge funds have popped up, and they're taking that money that should have been in savings, and now people are being forced to put it into riskier things like the stock market. So that doesn't really generate any economic growth. It just generates higher prices on the stock market.
Okay, got you. You're saying right now the only game in town is the stock market because you can't. It's too risky to.
Well, you're not going to put your money in the bank and get 0.5 on it.
Yeah, or lend it to buy bonds in a company and get practically nothing on it as well. I see what you're saying. Okay, so it'll be more people willing to venture their capital into real businesses because the payback should be there.
Right. Okay. Right. And I think that would remove the incentive from the big banks, perhaps the central banks or whoever's doing it to keep knocking down the gold price every chance they get. I mean, there's been some pretty massive sell-offs into some pretty suspicious circumstances over the last few years. It happens on a Sunday in Hong Kong, the big takedown when everybody's asleep. It happens at the strangest times. So it's a little suspicious.
Well, and that leads us into the next thing, because we've had Bill Murphy, a co-founder of GATA.org, who's a real watchdog about corruption, collusion, and illegal market fixing in the precious metals markets here several times on our channel. And he's also talked about basically impossible irrational levels of trading on the COMEX exchange, and how this just gets a blind eye turned to it by the regulators. There's no rule of law there, and there's hundreds of times the amount of actual physical metal that exists that supposedly changes hands every day, and yet there's not enough physical to satisfy even the simplest request, like from Germany to repatriate their stores of gold, that sort of thing. So can you talk to us a little bit about your view of legitimacy of the COMEX?
Well, I think the COMEX is essentially a casino. It's got no relationship to gold whatsoever, and it's unfortunate that the price of gold is set. It's not really set on the COMEX, but it's priced on the COMEX, and you can use the COMEX to move the price up and down in the during the times that the COMEX is open, because they just don't have the physical gold there. I think the last statistic was that the number of calls on each ounce of gold is about 500. So, the COMEX, I guess, is very good at trading itself in and out of its positions, but there's just not enough gold there to make it even remotely reflective of the real gold price. So you might as well just call it the COMEX gambling exchange, because it's got no relationship really to gold whatsoever. It's just where people gamble on what the price of gold is going to be at any given point in time. And
when they do that gambling and they drive the price of gold, it does have real world impacts on the gold producers, right? Because in your role as a gold producer, the economics of that business, the viability of that industry, is severely impacted by what happens to the gold price in this gambling casino.
Oh,
is that not true?
Absolutely. It's a terrible way, in my view, to set a price. It's got no relationship to gold whatsoever, but it does. Now, I read somewhere that it's illegal to set the price of a commodity, of a physical commodity, in a paper market. It's amazing that in most commodity exchanges, you actually take delivery of the commodity. So if you want to, it was set up so that if you had wheat that you wanted to sell, you could set a price so that you knew you could sell it at a profit and make some money. But you actually had to deliver the wheat. You don't have to deliver the gold anymore. It's just a complete it's completely disconnected with physical gold. So yeah, it's a funny way of doing it, and I don't know if it should be legal or not, but it certainly is a strange way of setting a price for a physical commodity.
That leads us also into another virtual world, and that is that of a cashless society. We've had several guests on who talked about the forces that are driving us to a cashless society and the evidence thereof. Recently, G. Edward Griffin, author about the formation of the Federal Reserve, was interviewed on Finance and Liberty, and he talked about the impacts to ordinary people for their ability to actually hold wealth or hold it outside the system, rather than in a way that is immediately vulnerable to and subject to the whims of the government and the banking system being taken away from them by a cashless system. So as they start to retire the $1,000 bill, the $500 bill, now we're down talking about retiring the 100 and so on. In other countries already doing retirement. In India, they've recently retired some of their denominations, and I have acquaintances whose family members do major business are business owners in India, and they said this is a tremendously disruptive impact on being able to carry out commerce, because you have to do it only in the latest notes, and there's lines 8 hours long, and you have to go to a different town to be able to get the cash so that you can do your business. What do you see as the impact of both the driving forces driving us towards a cashless society, and how that impacts the liberty of individual people who want to be able to control their own destiny, control their own wealth?
Well, I think it's terrible for individuals to have to go to a cashless society. You should have the option. We're mainly cashless here in North America, but we still can have a lot of cash on us. You can't really travel across any country borders with it, but you can You can carry a lot of cash with you, and I just think it's shocking that you can't get you can't even get a $15 note redeemed in India. It's everybody has to turn them in. I mean, it's just crazy. So that should really be driving the price of gold. I believe it has in India, from the reports I'm reading. It has driven the price of gold up, but now even the gold dealers are afraid to sell to people. And how much gold can you buy with $15 anyway? No, I think it's crazy, and it just shows you why you need gold and silver, physical gold and silver, just in case you need some form of exchange that the government can't take away from you. How easy would it be for the government just to dip in everybody's bank account and withdraw 10% of it? It'd be shockingly easy. Now there'd be a revolution, and there might be a revolution in India yet over this, over trying to go to a cashless society. It looks like a lot of unrest over there. So we'll have to see how that pans out. But I think I think going to a cashless society without having the ability to carry and own large amounts of cash and or gold and silver is very bad for our individual liberties.
You mentioned the risk of a revolution if the government tried to directly and overtly steal from people's bank accounts, for example, and that kind of thing has happened in Cyprus or in Poland or in other places. But where it happened, it's been happening since 1913 here in the U.S. with the dilution of the currency under the Federal Reserve. We've lost between arguably 95 to 98% of the value of our dollar, and so anybody who is holding money in dollars in the banking system, for example, even without a dramatic bail-in or seizure of funds by the government, every year they're losing purchasing power due to systematic, intentional, programmed inflation through dilution of the money supply. So it is being stolen by the government, and because it's a stealth tax, it's invisible to most people. If you go up and down the block and knock on the doors of all your neighbors and ask them, do they understand that their money is being removed, the value is being removed from their bank account without their consent every day and every year? Most people couldn't explain how that's happening. So where do you see, you mentioned precious metals as one way to hedge yourself against that kind of loss of wealth. Could you compare and contrast for us the benefits of holding physical precious metals versus owning mining shares, and how that differs as far as how you benefit when the money supply gets diluted in the case of inflation or loss of confidence in the currency?
Well, it all depends how bad things get. I mean, you really don't need physical gold and silver until you basically don't have any currency that's worth anything anymore. I think mining shares are a pretty good proxy for gold and silver, but a mining share isn't going to allow you, in the event of an earthquake, in the event of any kind of civil disobedience, to go out and buy anything. I think anybody that was in New Orleans, what they needed there were guns and gold, I guess, for self-protection and maybe to buy something if you could. I mean, certainly there's a value to having some physical gold around at all times, just for a backup in the event of emergency. And if the emergency gets worse, then you might want to have a little more around. So certainly it's good to have some physical gold. And I don't know who does in the United States. I mean, is it 1% of
very small percent. Most people don't even know how to get it or whom they could trust to get it from. We've had extended conversations with family members who spent their entire lives trying to be very responsible, working multiple jobs, always being ferocious savers, being very frugal, watching every dollar in, watching every dollar out, being very mindful about that. And they're seeing their certificates of deposit returns go almost to nothing, and their pension plans being at risk because the pension plan owners can't find a place to get the returns they need to make good on their commitments to the pension holders, and the risk of Social Security going bankrupt. And they're turning to us because we talk about these things, and they're saying, what else can you do? And when you mention precious metals, they go, where in the world would you get those? And because people aren't taught this, they don't know. So go ahead and kind of explain to us a little bit about holding precious metals versus holding, actually owning part of the source of where precious metals come from in mining shares.
Well, I think you get more leverage. You get more leverage from holding and owning a gold mining share, because then you've got leverage on management. You've got leverage on the price of gold, and you've got leverage to maybe finding some more gold or increasing production, things like that. But you really want to have some physical gold, enough to meet your, at least your basic requirements for a while. And I guess the definition of while will depend upon the person. But you want to have some physical gold around because you may need it to pay for things. If you're in Venezuela right now, if you're a Russian, 2 years ago, you didn't have assets offshore. But the only thing you could do in Russia was have gold on hand, because the ruble got devalued so quickly and so deeply that real estate dropped. Anything else you owned in Russia dropped in value like a rock, except for gold. So that's one instance you want to own gold, because it doesn't debase like a fiat currency. If you're in Venezuela right now, you want to have silver and gold because you want to stop the effects of hyperinflation. You can live quite well on a silver coin in Venezuela, but if you've got paper money, you've got to load it on a wheelbarrow to buy a loaf of bread. So things are getting really bad there, and this goes back to the currencies. And it's only the U.S. dollar right now that is looking particularly strong, and it looks like it's at the upper end of its channel right now. So it's really it's really important to have some physical gold around, and silver as well, just in case of an emergency. It's just solid planning. It's like prepping for anything else. It's good to say you have an earthquake, right? So let's not talk about anything else beyond an earthquake or a civil disturbance. You need to have water. You need to have food, enough to last you for probably a couple of weeks, and you need some money. So paper money probably wouldn't work in those circumstances, and certainly gold and silver would be deemed as a much higher and better form of currency.
Now, you mentioned mining shares as opposed to bullion gives you leverage. Leverage, we've learned painfully after the dot-com bust, et cetera, can cut both ways. So it depends where you're at in the boom-bust cycle, based on where you believe we are at in the gold market. And we've certainly had multiple people on, including David Morgan, founder of the Morgan Report and kind of a well-recognized guru on gold and silver markets, saying that we are in like the third stage of a secular bull market in gold. So even recent retracement over the past 2 months is just setting us up, in his view, for future advances. Where do you view that we are, and how does that impact which way the leverage will affect you if you hold mining shares in addition to bullion?
Well, I think the price of gold and silver are both going higher in the medium to longer term. Actually, I think they're going higher in the short term too. This has been a long and protracted correction that we've just gone through. I'm sure a lot of people have just thrown in the towel and said, I'm so fed up with gold and silver that I just can't take it anymore. And they probably sold out, which is exactly the reaction that, the people with enough money to knock the price of gold and silver down want to get. The traders and the big commercials, they want to get that reaction out of you. They want to make it so painful that you just can't hang on anymore. And that's when you give up, sell your shares, sell your gold and silver, and they buy it up gratefully, and then all of a sudden the price ramps up. So, I'm reading a lot of commentary these days about how we're going back to the old, back to the 1050 range. Well, we're only $110 off the 1050 range right now. So I think this has been painful enough. I think that this is a correction in a longer-term bull market. I think we're just the first year into it. and we're going to see much higher prices in the years to come. There's just been too much money printing. There's too much debt. When you do look at fundamentals, there's just way too much that's offside in the world, and there's a real place for gold and silver.
Any last thoughts for our subscribers on your business, the role that you're playing in that comeback as part of the bull market in gold and silver?
Well, I'm very bullish. I'm the chairman of Inca One. I think Inca One has a bright future. It's a toll milling company in Peru. We're hoping to get to positive cash flow very soon. We've restructured the company. I think it's in very good shape to take part in the upswing in prices. We're out looking right now for some new assets, some development assets, and hopefully we can use the cash flow from operations at the mill to help us with development of new assets. Personally, I'm out looking for other opportunities in the. I'm an entrepreneur and a company founder. And I'm out looking to be a founder of another company here soon. I just got to find the right asset. To me, it's all about the assets. You need good, solid assets in a company, something that has a chance for production, something that is not going to be a cash drain, something that you can make money with. So it takes time to find the right asset, but certainly once you find it, it's worth the search.
Well, Bruce, thank you so much for joining us here on Reluctant Preppers. If people want to find out more of your work, where can they find you on the web?
As far as Inca One, it's incaone.com. And for me, you can just Google me.
Well, Bruce Bragagnolo, chairman of Inca One Gold, thank you so much for joining us here on Reluctant Preppers.
My pleasure. Thank you.